Hello everyone and welcome to Inderes TV. Today we are going to talk about Lindex, who recently reported its result for the first quarter of 2025. Joining me to discuss this, I have Susanne Ehnbåge, CEO of Lindex. Welcome, Susanne.
Thank you.
So could you start off by summarizing the key points of Q1?
Yes, of course. So in Q1, on the positive side, both Stockmann and the Lindex-division improved gross margins versus the previous year, reflecting disciplined operations and also, I would say, effective margin management. Stockmann division also continued to strengthen its adjusted operating result, marking the fourth consecutive quarter of improvement, highlighting the impact of the ongoing strategic efforts. Revenue, however, declined in both divisions, driven by weak consumer sentiment and also a continued volatility in the fashion market. In addition, the comparison period was longer due to leap day, which was affecting also the revenue, particularly for the Lindex division. And Lindex division also faced temporary revenue pressures due to supply delays during the ramp-up of our new omnichannel distribution center. And these delays were further compounded by the extended lead times from Asia, affecting stock availability in key categories in our sales channels. But we believe that these kind of disruptions are typical in major transitions, and they are not expected to impact the full year performance. And we can already now see that the stock levels have returned to a more balanced level in our sales channels, looking now at the end of April.
Interesting. So if we look at the overall market development, how would you say Lindex and Stockmann performed compared to the market developments?
I think the market has not been easy and not easy to read either. We can see that the consumer confidence fell in all of our three main markets during the quarter, and that we maintained a high fashion market volatility. In Finland, the fashion market then decreased during Q1 with -1%, while in Sweden we have sort of a mixed message where we have data from Uusi that indicates a decline of about -4% in 1 month, and then it's an improvement of 6.5% another month. However, there's also a big difference between the data sources that we have available, where we have also other data saying a quite big double-digit decline in Sweden during the first quarter. So, but no matter what, we are not satisfied with our development in the first quarter, but we have very, I would say, underlying reasons that are clear to us, and we also know what to do now for Q2 to improve the situation.
So Lindex division's earnings dropped clearly year over year. Was this purely due to the logistics issue, or is there something else impacting as well?
The logistics problems that we have that affected the stock availability, but also that we had a quite big impact of the leap day. Those together stood for more than the full revenue drop versus the previous year. So here we can sort of explain the difference between the years, but we also see that the weak consumer sentiment and the continued volatility in fashion market most likely also impacted the revenue development.
So would you say that those logistics problem will continue going into Q2?
We can see now at the end of April, or starting from the mid-month to the end, that the stock availability has returned to a more balanced level in our sales channels, and also that the speed in our new omnichannel distribution center is improving day by day. So currently we are having a quite good setup with the flow to our stores and also e-com.
I'm also interested to hear about the ramp up of the new distribution center. How is that proceeding?
I think it's proceeding well. We started to sort of use the new center here at the end of last year in November, and then it has been followed up by like an extensive ramp up and transition phase, and that we estimated to be continued during the first half of 2025. This gradual transition will also continue to the second half of the year, as we want to secure a solid performance of the center. But currently we're moving then the stock, so we have around 70% of the stock now in the new center, and the speed is improving day by day, which is positive to see.
Mhm. Great. And the timeline of end H1 for the strategic review, is that in any way related to the restructuring process?
As I said before, when we have spoken, I mean, the strategic assessment is ongoing, and we expect it to be finalized here at the end of June. But I cannot comment the process in more detail, but we will provide an update of this assessment and also regarding restructuring when we can.
And then I'm thinking about the weakening of the USD. How and when is that impacting your figures, given that you source mostly in USD?
Yeah, that is, of course, for the Lindex division that sources the majority of its products in US dollar. And the fluctuation that we have seen in the US dollar exchange rate do impact our cost base. However, the effect is not immediate. So based on our sourcing and product and hedge strategies, we typically experience a delayed impact of approximately 8 to 9 months. And this lag is due to the lead times in our procurement cycle and including order placement, productions, and delivery schedules. So the Lindex division hedges a major part of its contracted purchases, and as a result, current financial figures reflect sourcing cost based on earlier exchange rates, while the effects on the US dollar fluctuation will gradually be seen then in our cost structure over the coming quarters. So approximately a delay of 8 to 9 months. So here we need to look back where the US dollar stood then 8-9 months ago.
So lastly, your guidance is unchanged, but do you see a risk of continued weakening in the consumer demand on the back of increased economic uncertainty due to the tariffs and so on?
Yeah, we maintain the guidance, but in our outlook for 2025, we took into account that we expected challenging market environment, combined with uncertainty, especially for the first half of this year. Economic uncertainty is most likely higher than ever, and it is also impacting consumer sentiment. But we continue monitoring our performance and market conditions as we normally do. But for now, we are keeping our guidance.
Great. We look forward to continue following you in the future here. Thank you very much, Susanne.
Thank you.